Today, we're talking about how to invest in real estate, especially multifamily real estate in today's challenging economic environment that we live in today. My guest today is Jonathan Twombly. I'll tell you about him in a second, so stay tuned.
Welcome to the Smart Business Revolution podcast, where we feature top entrepreneurs, business leaders, and thought leaders and ask them how they built key relationships to get where they are today. Now, let's get started with the show.
All right, welcome everyone. John Corcoran here. I am the host of this show. And I'm so privileged because every week I get to talk to smart CEOs, founders, and entrepreneurs of all kinds of companies. We've had Netflix, Kinko's, YPO, EO, Activation, Blizzard. You can check out the archives to check those out. And of course, this episode brought to you by Rise 25, my company where we help B2B businesses to get clients, referrals, and strategic partnerships with done-for-you podcasts and content marketing. And you can learn all about what we do by going to rise25.com. And my guest here today is an old friend who I've known for many years now, so long that we can't even remember how exactly we met, but we've crossed paths multiple different ways. His name is Jonathan Twombly. He's a former Wall Street lawyer and have many years of experience in investing in real estate, especially multifamily, and now more recently, some motels. So if you ever watch that Netflix show, Motel Makeover, this is like the real life version of it, but without all that catty little infighting, hopefully. Anyways, but we'll find out if he does have some of that. But he's got a really impressive legal career, graduate of Harvard and Columbia. He's lived all over the globe, including in London, New York, and Japan, and has an interesting startup story. So we're going to dive into that. But Jonathan, such a pleasure to have you here. I love having former lawyers turned entrepreneurs on this show because we are a rare sort of people who can go from the uber cautiousness of being a lawyer to the wild west of being an entrepreneur. And you actually started a side hustle on the side while you were practicing law. So you're a practicing attorney and you decide to start a matchmaking business, kind of a dating business, which I can imagine was super popular with your classmates from Harvard and super popular with other lawyers who tend to be kind of conservative and question why people would do something like that. But take us through that. What was that like for you when you're practicing law and then you and your brother actually started this side business that was kind of a matchmaking business?
Yeah, it wasn't exactly a matchmaking business. It was actually, the idea was, people in their 20s and 30s, professionals just had a hard time meeting each other. And it wasn't sort of like matching up men and women specifically, but what we would do is put on in-person events at fun venues and try to, and it was like a membership-based thing where if you were a member, you could come to the events, and if you weren't, you could come, but you had to pay more. And it was basically something that we stole from a group in New York City that was doing the same thing rather successfully. The business, after much back and forth, was called Boston in Common, and didn't last that long. It's sort of like a year or so that I think we kept on, pushing the rock up the hill. But it was a lot of fun, and it was the first time I ever actually scratched that entrepreneurial itch that I had.
And those are one of the hardest types of businesses to start because no one wants to go to an event like that where there's 3 or 4 people, right? Like it has to be a certain amount of people in order to make it interesting. What were the early events like, and how did you actually, did you beg, borrow, and steal, get your friends to come out? How did you get people to come to those early events?
Yeah, I mean, we did invite a lot of friends just to fill them out at first. We did some advertising. I mean, it's funny, this is so long ago that we did ads like on the Boston subway, right? And which it's kind of funny when I think about it. Like we really thought, like, wow, if we put an ad on the subway, like we were going to get, like, people were just going to flood in, right? And we had like a funny, I think the ads were very simple. They just said, "Got friends?" And we thought like, oh, this is so clever and cute, and like everyone's gonna like find us, and like really nobody did. But we did have some really fun events, and we did have some paid members. So it actually, we didn't make money, but people did pay us to attend these things. And yeah, it was fun. I mean, it's so long ago now that I just sort of don't really remember it. But we had started it, I think, because my brother had just been laid off from his job. This was like 2001. It was right after the dot-com bubble crashed. He was in tech, and not on the tech side. He was in worked in sales for a tech company and got laid off. And as did the person who became our third partner. They worked at the same company, and so my brother Dave, was like, I want to start a business. I've always wanted to start my own business, and I'd always had this itch too. And I was like, okay, well, I've got money. I can fund part of it. We actually went to like our family and we got more funding from our family. We had no idea about how you that we were selling securities, stuff like that. We had no idea that this is supposed to be a private offering, which is like, ironically enough, like what I do now. But but we got money, and kind of like Dave ran the business and he put on events, and we got in lots of fights as siblings trying to run a business together. And, just kind of look back on it and laugh.
You said it lasted about a year, and this was in 2001. Did 9/11 happen in that time period?
I think it actually happened in 2000. I think this was actually 2002 that we started it.
So it was after 9/11 that you started.
I think so. Yeah, I believe so.
Also a tough time just to get people out and about.
Yeah, potentially. But I mean, like I said, we did actually have decent turnout at the events. It just wasn't like we couldn't get enough kind of members, and we didn't really know how to. We didn't really have much money for marketing, and we spent a lot of money on those subway ads. It didn't work, and so we kind of ran out of money fairly quickly.
Yeah,
but
And ironically, now you had said that you created this in part like a reaction to online dating.
Yeah.
And one of the people that you hired as an events coordinator actually ended up getting hired away by Match.com, which of course is like the behemoth, became the behemoth in online dating. And they kind of took some of the stuff. Was that really like debilitating when that happened, to lose a key person like that?
Well, no, because it was kind of like we were on our last legs. It maybe put the nail in the coffin, but I mean, it was pretty clear that this wasn't going anywhere, or that like we needed more money. And I guess we never thought at the time, like, oh, you could go raise money from someone else like Match or whoever, right? So, but when she got hired away by Match and basically took our whole business model to them, and was like, if you have enough money to fund something like this, you can make something of it, which turned out not to be true. They very quickly, I don't think that lasted very long, even with Match's funding. And Match wasn't as big then as it is now, but it was already kind of like the player in online dating. And even Match was having trouble in those days kind of convincing people that online dating is something that they should do. So, which is why they were doing these in-person events.
And an interesting anecdote, you had a web developer who kind of saw an insight and made a recommendation to you, which you ultimately didn't take, but could have taken you down a much different path, becoming kind of like a Facebook. So what was that suggestion?
Yeah. So our web developer said to us, like, you guys really should allow people to put up their own online profile, right? That this is what people want. They want to have like a place where they can like put up their own stuff and like, communicate with other people. And I don't remember exactly in those days sort of what the technology allowed people to do, but at least, to have their own sort of online space where other people could see them. And my brother and I were like, no, that's not what we want to do. We're trying to get offline. We don't want to be online. But I mean, we could have been Facebook or something, or MySpace or something like that if we had gone down that route, but we didn't see the vision, so we missed out on that. So
right
yeah.
Your experience kind of reminds me of my own, because I had a couple of false start businesses that didn't gain traction, and then I would kind of like take a little time back and practice law for a little bit and lick my wounds, and then try and figure out what my next thing was. And that's what happened for you, right? You went back to practicing law. Tell us a little bit about what things were like for you after that.
Well, I mean, I was still practicing law the whole time, right? So I hadn't, I guess at that point, I thought, well, if the business ever takes off, it'd be great. Then I could like leave law and go do this full time. But I wasn't in that position at that point. I made many stabs at getting out of law. It was something unusually, most people kind of detest their first few years of legal practice, and then it gets a little better. I was the other way around. I actually loved my first few years of legal practice, and then it all came to a grinding halt. And after that point, I just became very disillusioned and really wanted to get out of it. But the thing,
what was that? Was there something that straw that broke the camel's back, or something that made you hate it?
it was, it was when I was doing litigation, right? And which is a really unusual career path from like litigation to being an entrepreneur. I don't think I've met another litigator. There's lots of corporate guys, but not many litigators. But the when I started out and all I was doing was kind of writing briefs, and I was like very deep into like the intellectual aspects of law, that I enjoyed, but and doing like appellate work. But after about my third year, I started getting more heavily involved in just like the day-to-day mind-numbing, like back and forth petty BS of litigation, right?
Mm-hmm.
And
fighting with other opposing counsel,
fighting with opposing counsel, writing stupid letters back and forth, accusing each other of stuff, writing letters to the judge, accusing the other side of stuff. And then just all like the minutia of getting ready for trial and like keeping track of documents. So it's just like, it was horrible.
Yeah.
And it just, and horrible and like interminable hours, right? I mean, I was working late nights, weekends. I had no time to myself. It was just a terrible grind and a terrible life. So I got really bored of that. But I also, one of the things that was constantly on my mind in those days was how unentrpreneurial big law firm life was, right? And I just remember thinking,
very
like,
much so, yeah.
All I want to do is like be allowed to have a thought that nobody had before. Like, I don't know if you're like how familiar listeners are with like litigation, but when you're writing briefs, I mean, you have to cite a source for everything, right? So you can't make an argument without there being like basically somebody who thought it before that you can rely on, right? And and that was making me crazy. It's like, man, I just want to be in a position where, I can look at the world and say like, wow, there are all these widgets out there, but nobody's ever made one that's green. I'm going to make the green widget, right? And like, you can't do that as a lawyer. And it was just really eating at me. So I think that's why I had that first venture with my brother, just to kind of scratch that itch. I didn't think I was at that point would ever go into business for myself, but I definitely wanted to be like on the business side of things where I could just create something and not be fighting with people for a living.
Yeah. I know the feeling for sure. I went through this kind of the same emotions. And so like many very, people who've excelled at academics, as you did, having gone to Harvard and Columbia, you went back to school and you actually were studying for a while to get your PhD. And it was connected to your love of Japan. You've had a lifelong love for Japan. Where did that come from?
The love of Japan?
Yeah.
The interest in Japan. Well, that's kind of a roundabout. Most of my life just happens in these sort of roundabout stories, right? So when I was in college, it was the height of the Japanese bubble. And just as an aside, the last few years when I saw everybody studying Chinese, I always sort of laughed about it because I was like, I've been through this before. So when I was in college, it was the height of the Japanese bubble, and like everybody was studying Japanese because they all thought like, oh, this is the key to like future riches, right? And so one of the people who was studying Japanese was my girlfriend at the time, right? And so she, during one of the summer breaks, went to Japan for the summer, and I was stuck back in New Jersey where I grew up with some crappy summer job. And we were like writing letters to each other, and every once in a while I'd call her up and I had like $100 phone bill to Japan, and my mom would get pissed at me. And my girlfriend was saying stuff like, I don't know what you're going to do when we graduate, but I'm going back to Japan, right? So I thought, well, I think I probably want to take a break after college. I don't want to go straight to any kind of graduate school. So why don't I go to Japan with my girlfriend? So then, just being very practical minded, I was like, well, I better start studying Japanese then. And I started studying Japanese in my junior year of college and just really liked it. And I was an American history major, right? I had no connection with Japan whatsoever. I just really liked it. And then when it came time to graduate, I still didn't want to go back, straight into school. Of course, my girlfriend and I had broken up, naturally. But I had kept on studying it anyway. And then I thought, look, well, what am I going to do now when I graduate? Like if I go to Japan and learn Japanese, well, maybe that'll be good for my career somehow, someday. So I went to Japan. I thought I'd be there for a year. I wound up being there for 3 years, and then decided
So you
to
got
go
a
to law school
job
at that point.
there?
I did. I got 3 jobs. I got 3 jobs there before I left, which so I went and I wrote to every, they used to have this book at Harvard. It was the Harvard alumni directory. It had like the address of every single living Harvard graduate in it. And I went and I found every single one of them who was like work in a law firm in Japan. And I wrote them, I sent them all the same letter. And so somebody called me back and said, hey, we have a job for you if you want to start a year from now. and then I just got lucky, and through the Japanese department at Harvard, I got like a summer internship and then a 1-year position working at a magazine in Tokyo. And then I had that other job starting sort of when I finished that. So basically had like 3 jobs lined up when I got there.
Yeah, yeah. That must have been an adventure. So after you flashing forward a little bit, you end up 2010, 2011, that kind of time period, we have the financial crisis. And you actually end up losing your job practicing law. I think you're in New York City at this point. What then led you into real estate around that time?
Yeah. So I had an interest in real estate for some time, just as, like an investment. And it seemed like something easy to do. And you kind of saw those people, especially, the before the financial crisis, everybody was buying houses and flipping houses and stuff like that. And it watching HGTV, and it all seems so easy and certainly more fun than being a lawyer. And I had this idea that I wanted to go work for some kind of, institutional real estate company. And then, so I was sort of thinking of that on the one hand. Then on the other hand, like after 2008, 2009, the work at my firm really dried up, right? And I was sitting around with nothing to do. And for some reason, they kept me on for 2 years when I had very little to do, right? But during that 2-year period where it was really, I just, didn't have a full plate, I spent a lot of my downtime just looking online at real estate, trying to figure out like, how much real estate would I have to buy to replace my income? And it didn't look good, right? Trying to like buy like one house at a time where I'd make, like rich dad, poor dad style, like you're clearing $1,000 a year on this property. And it's like, okay, that means I've got to buy 200 of these, and they're going to cost me $200,000 each. Like, how am I ever going to do that?
Yeah.
But that's kind of what I was going through. And when it became clear to me that I was probably going to get fired, because I had no work, I started doing a lot of networking, and then I started meeting people who were in real estate and just talking to them, trying to figure out like, how could I break into this? How could I break into this? And kind of all at the same time, like a confluence of different things happened. So I did get terminated, but they gave me like a really nice severance package. So I had like 4 or 6 months of severance to kind of figure out what I wanted to do. I was talking with people in the real estate space who were saying stuff to me like, you got a great resume and, great background and all this kind of stuff, but let's, be honest, like, we just had this financial crisis. There are like 10,000 guys on the street who have been doing this for 20 years who are all looking for jobs. Like you're not going to get hired when, as a career changer.
Yeah.
When these guys with like real experience are looking for jobs. So the only way you're going to break into this business is if somebody wants to partner with you. Then I met somebody who was like, hey, I'm starting a real estate investment business. Would you like to partner with me? And I was like, I don't know. I don't know if I want to partner with you. I don't know who you are. I don't know if you're any good at this. So what I decided to do was do due diligence on her by trotting her around a bunch of my like wealthy, more financially sophisticated friends. And the upshot of that, of letting her like pitch them on what we were doing, was that a bunch of them said, hey, Jonathan, if you decide to partner up with her, I will give you money to invest. And it was like real money. It wasn't like, I'll give you $50,000. Like I had a couple of people say, I'll give you $1 million to invest if you do this. Right. So I was like, okay, I've got somebody asking me to be a partner. Somebody else said the only way I'm going to break in is if I become partners with somebody. And then 2 people offered me $1 million to invest. I probably should do this.
Yeah.
So that's how I got started. We formed a business. We started looking for deals. So here's a funny story. Like lack of communication, right? You're not knowing what you're getting into. I just assumed because like my head, because I'm living here in New York City, like the New York City conversation for kind of like real estate investors on this kind of personal level, like sort of retail level, as I think of it now, that conversation was all about like, you're going to buy a brownstone in a gentrifying neighborhood and you're going to kind of like get it, buy it cheap, and then you're going to sell it expensive. And, like you're going to flip it or something like that. That's what I thought we were getting into. That wasn't what I was getting into at all. She was like, no, we're going to go buy, 100-unit apartments down in like Louisiana. And I was like, what? Like, how does a person buy a 100-unit property? Like, that's crazy. But on the one hand, it turned out that a 100-unit property in Louisiana at the time cost about the same as a brownstone in Brooklyn. Right. And so that made it a lot easier.
Yeah.
But basically I learned the business that I'm in now, which is what we call it real estate syndication. What it is essentially, you pool a bunch of investor money together, create a fund, but it's a fund for only one property, right? So each property has its own set of investors in a fund. You buy the property, you do whatever your business plan is. I mean, your business plan might just be hold it, right? If it doesn't really need work, or if it needs a lot of work, you fix it up, increase the value, and then hold it, and then eventually sell it. So, but whatever the business plan is, the structure of it is, you've got your general partners who are doing all the work. You've got your limited partners who put in the money and get the profits. And, you identify a property and hold it for whatever holding period you've, planned to, and then eventually sell it and get everybody's money back and hopefully, make them a profit. So on a really basic level.
And the challenge with your previous business, the Boston and Common business, was that you weren't able to figure out a business model that was profitable, that supported you. Did you find with this new endeavor that you were able to support yourself shortly after that, or did it take a while?
So it did take a while, because the issue with that business is, or this business, I should say, when you're getting into it, it's I mean, as a general matter, it's hard to find good deals. But as when you're starting out, it's especially hard to find good deals, because you don't have
what to look for.
Well, no, it's less. I mean, that's part of it. You don't know what you're doing is part of it.
Yeah.
But another part of it is that you have to gain the trust of the broker community, because for larger properties, any kind of multifamily properties that are, I'd say anything more than say 20 units is going to be handled by a commercial broker. And the commercial brokers, there's even for like a big city like New York, and we were down in Louisiana, right? It's a very small number of people. It's a very small community, and they're very wary of dealing with people who are going to waste their time.
Yeah.
Right. So it's really important to them that you close, because their reputation is on the line with their clients or the sellers.
Yeah.
And they're also, oftentimes, the last few years where there's been like so much activity, those guys have made a lot of money. But when I was starting out, it was a soft market, and commission that they might get on a property, that could be the only commission they were going to get in that year. And it would be enough for them to live on for the year, but that was it. So they were really wary about trusting anybody who was new or didn't seem like they could close. So
this kind of has the makings of like a movie, like big city slicker, New York City lawyer flies down to Louisiana to try and, convince them to buy this, to sell to you, this 100-unit apartment building when you've never done it before. Do you recall like what you did to try and win these people over? I imagine you didn't have any connection to Louisiana at the time.
Well, my partner did. That's why we were
okay.
there. So she and her husband actually owned some property there already.
Okay.
And that was why. But so the reason that I was like, well, why aren't you working with your husband? And she's like, my husband, he's got money. He's happy. He doesn't need to work. But I want to build something. I'm young. I'm young and I want to build something. and my husband won't do it with me, so I need a partner. So that was kind of how we connected. But she already knew some of the brokers down there and stuff. So we did have a little bit of like an in that it helped that they had property already. So there was like, we kind of borrowed their legitimacy a bit to at least get us talking with the brokers, right? So that helped.
Yeah. Now, eventually, this becomes two Bridges Asset Management. You manage a number of different properties. I'm flash forwarding over a number of years here, but I recall talking to you a couple of years ago, and I can't remember what year this was, but didn't you sell off your entire portfolio at some point?
I did. So here's sort of what happened. So that first partner and I, we went our separate ways because of like, we chased a bunch of deals in Louisiana. It was a bad lending environment. We were in contract on a couple of deals, and lenders backed out on us, and we couldn't find a lender to replace them. It was really kind of a searing experience. Lost a bunch of money, and decided when it was all over to just kind of part ways and go do our own thing. Then, I was out with one of my investors, one of the guys who I had originally kind of consulted when I was thinking about getting into this. And I was like, we went out to dinner. I was like, dude, I might have to go back to practicing law. And he was like, whoa, hold on there, partner. I will back you in a venture if you want to do this. Right. So we wound up partnering. He gave me some seed capital so I could start, I could actually make some money while I was building the business. And that was how I actually started getting some real traction. Then I switched markets. I went down to the Carolinas. I kind of was able to worm my way into the broker community through some personal friends, which is a great way to do it, actually. And then I started being able to buy property, right? So I built up a portfolio of apartments down in South Carolina, and we held them for a number of years. And then 2019, I sold the whole portfolio because at that time, it's hard to remember back right now because we've had COVID and we had that, especially in the property business with low interest rates, we had this property boom. But in 2019, the property cycle had been going on for a long time. It was already the longest expansion in the history of the real estate market. It had been going on for 10 years. There was a pretty common consensus that it was running out of steam. And a few people remember this, but there was kind of like recession on the horizon. They were talking about, and there's later on people have said, we actually did enter a recession in the beginning of 2020, just nobody noticed because COVID happened and then all the craziness. So I looked at the environment and I was like, I think it's time to get out of these properties. We essentially were offered more money for them out of the blue, called by a broker who asked if I would sell. I gave him a number that was designed to make him go away because it was like designed to be a stupid number. And then he came back and was like, our clients will do that. So
damn, why didn't I say higher number?
Exactly. I should have said, higher than that. But we exited those properties. We doubled everybody's money. Everybody was happy. And then I kind of like focused on my coaching program for a while, kind of partnered with other people on deals. That's kind of,
And you eventually decide to buy a small motel, kind of a rundown motel in upstate New York. I want to hear about that. And I also want to hear about, you've gone from New Orleans to Carolinas to New York. And how have you managed to evaluate these other opportunities in other markets that where you don't live there and maybe you don't know the local flavor, you don't have don't understand the local environment or the geography or anything like that? How do you evaluate them?
So Louisiana I was just sort of dragged into that and just relying on my former partner's experience of that market. The Carolinas was a little more intentional. The way that I picked that market was, in 2012, the census data came out from 2010 census. And I basically sorted all of that data and basically sorted it into the MSAs, the metropolitan statistical areas that had population growth that was higher than the national average and that were on the East Coast. And because I didn't want to, one of the things I learned about doing business in Louisiana was that flying to Louisiana and Texas from New York takes a really long time. So like you're talking about like to get there for what it's 3 days for one meeting, right? You know, between there and back. So I was like, I don't want to do that anymore. There's lots of opportunity. Wow, look at the Carolinas and look how fast they're growing, especially a couple of places that were like sort of off the radar. You know, everybody was looking at Charleston saying, oh, look what's happening in Charleston or Charlotte. But what I noticed was that Greenville, you know, which now is on most people's radars, was growing really fast. And when I went down to check it out, I was like, man, I really like what's happening in this city. So I started just focusing on that market and just really kind of learning that market and, you know, talking with brokers, talking to property managers, getting a feel for what was going on there. And then was able to kind of break through with some brokers and find my first deal. And the kind of nature of this business is it takes you a long time, as I was saying before, to like get the broker community warmed up, you know, get them to take you seriously. But as soon as you buy a property, then all of a sudden they're all like coming to you, right? Because now you prove that you're legit. So I was able to do a bunch of deals relatively quickly after that first one. But
and what about upstate New York? Other than you live in New York, did you have any connections to the area, or did you come to the same conclusion that it was a high growth area?
No, it's definitely not a high growth area. So that was, you know, that was really more of an opportunistic thing. So the way that came about was, we had bought, you know, like many other, we bought a COVID house in upstate New York, right? And basically in the area that we would go to every summer, right? I've been after my wife to buy a house up there for years. She never wanted to. She's like, I don't want to have a second house, too much work, whatever. When we went up there the first summer of COVID and like got out of our apartment in New York for the first time, like had some fresh air and some room to spread out, my wife was like, we're buying a house. So I was like, oh, thank God, like finally. So we bought a house up there. And in order to get to this house, we would have to pass by this old motel. And it was in this spectacular location overlooking Seneca Lake, which is one of the Finger Lakes in upstate New York. It's like the wine region. Yeah, it's sort of like it's like the East Coast, you know, Sonoma Valley, right? And it's and every time we passed this hotel, we would have the same conversation, which was, wow, what a shame. Look at this hotel in this amazing location. Somebody ought to do something about this. It's, you know, I wish somebody would fix it up. So one day I had this idea that if I started doing business upstate, my wife would let me spend more time there. So I started looking for properties to buy up in upstate New York. And I came across this hotel for sale.
It was listed. You didn't knock on the door or anything like that. Okay.
No, it was listed for sale and it had been on sale. They'd put it up for sale in the middle of COVID. You know, it sat on the market for a year and sort of price cut. And I was like, well, you know what? Maybe I ought to do this, right? So I went and through a business partner of mine that I had done some capital raising with for like cannabis company and some other things. You know, I asked him like, hey, do you know anybody who is in the hotel business? And he said, yeah, as a matter of fact, my wife's cousin is a hotel management guy. You should talk to him. So talked with same as Shiv Parbu. We talked. I showed him the hotel. I kind of showed him, to get his thoughts on it. And Shiv was like, yeah, I think this is an interesting opportunity. So I went to just one investor who I thought might be interested and said, hey, look, we have this opportunity. What do you think? This is what we think we can do with this hotel. This is the pro forma. And he was like, okay, yeah, I'll do it. So we bought that hotel and we operated it for the rest of the season. And then we shut it down at the end of the season and went into renovation mode. And we're, today is August 11th. We're literally like the very final finishing touches are going on this week. We've been open for the whole summer, but just like we opened as we were continuing to renovate, and now we're basically done.
And what were some of the differences for you in, operating and buying a motel versus, an apartment building?
Well, so there are a number of differences. You know, for one thing, even though a lot of doing the apartment buildings is rehabbing them and repositioning them. I mean, depending on what your strategy is, but that's a fairly common strategy, right? To buy an older property and fix it up, or even something that's not so old, but just that needs updating. Right? And
Neglected,
so
yeah.
it's not necessarily neglected; it's just out of date. Like maybe
Yeah.
the kitchens are 15 years out of date, and so you bring them. Renters want modern and new, so you update them to the whatever the standard is today, and you raise the rents. Like that's the play. Um, in a hotel, but it's all sort of very generic, right? The stuff that you do with most apartment buildings is kind of like the same basic package, or the same basic thing you're doing. Like you're replacing the countertops and the flooring, you're putting in new appliances, you fix up the bathroom, and it's all sort of like looks the same. And all the apartments are always very generic because people want to come in and like put their own touches on it, right? So there's not really any design involved. The hotel was like heavily designed, right? There's a lot of design involved in like rebranding, logos, design, what we were going to do, or reconfiguring rooms. This hotel had a restaurant and a bar as well. So I really liked that whole process of redesigning the hotel. It's just really fun and exciting and thought provoking. And you're really thinking about, it's a very different thought process, because with apartment buildings, the kind of consensus is like, A, everybody needs a place to live, and B, there's a housing shortage. So people are going to come unless it's a real dump, right? And even then, people may live there because they have no other choice. So you're kind of like, as a landlord today, you have a lot of market power, right? In the hotel business, it's very different. It's like, you got to convince people to come here, and then you got to convince them to want to come back, right? Because if they don't come back, like you're out of business. So you have to create a guest experience. It's not like, hey, too bad, you guys have no choice, you got to live in our building. It's like, hey, you welcome, like, come on, like, have a good time. Yeah. Like, I hope you like the beds, the whole thing. So a lot of effort went into the design of the hotel and the rehab of the hotel. And then, if I say so myself, we did a really beautiful job on it. And it's great. I mean, also working in a small town is very different too, because they're very excited for us to be there. The people, the folks in town also really wanted this place to be fixed up. And so we've gotten a lot of really positive feedback from, people in town just about, what a great job we've done. Like, and just that it's, the Chamber of Commerce is happy because it's like, there was one hotel downtown and they were like, oh, this is great because now there's another good place in town for people to stay.
Yeah.
So yeah, it's just been really fun.
And I assume you're not operating the restaurant yourself. I assume you had to find a tenant for that. So that's a whole other animal.
So, here's actually, this is something else I wanted to say in response to the previous question, which is, how is it different? The other thing that I did differently at this time, and I think smarter, was that I didn't try to do everything myself, right? So I went and really did more of a like right butts and right seats and kind of focus on the thing I'm good at and find somebody else who's good at what I'm not good at. So Shiv is a great operator, right? I mean, he really understands hotel operations. He really understands, the process of rehabbing a hotel. He's done 10 or 12 of them before this one that we did together. My skill set is in finding the deals, putting the deals together, structuring the deals, raising the capital, right, for the deals, and also to some extent kind of having the vision of what it should look like when it's done. But execution is not what interests me, right? I like having the big picture, and Shiv is great at taking care of all the details and kind of making the vision happen. So it's a really great partnership, which I didn't have when I was doing multifamily, because I was sort of trying to do everything. So that was like a lesson I learned from like what I was doing in multifamily that I did wrong, that now I did right. And now the thing that's kind of, for me, maybe most entrepreneurs like had this eye-opening moment like 20 years ago. I'm slow. I just suddenly I see a pathway to scale, because like my eyes have been opened about, okay, wow, I can actually grow this business much faster if I'm not trying to do it all myself. If I've got other people, doing the stuff that I don't like to do, then I can focus on what I like. They can focus on what they like, and together we can move the whole thing faster. So that, for me, that was like a big aha moment, right? So
yeah. And about the restaurant, you were going to say?
On the restaurant, so we're operating the restaurant ourselves. So we just, we're not cooking, obviously, but we hired a chef, and we have a restaurant manager. So
okay. Yeah, because that's a whole nother animal too, right? Especially compared to an apartment building now running a restaurant.
Yeah, and we had to go through the whole liquor license process in New York, and all of these things that we kind of didn't really anticipate. Because originally when we underwrote the hotel, we did plan to lease it out to somebody, and then we kind of realized that we wanted to control what was in the restaurant. We didn't want to just have some tenant there who maybe was at cross purposes with us, maybe had a different vision for what the restaurant should be. We wanted to control what it was. So fortunately, we actually hired so when we bought the hotel, we bought it from a family that had owned it, for 60 years or whatever. We actually hired as the manager, the day-to-day manager of the hotel, the daughter of the family who had been running the restaurant. That had been her job before. So we kept her on. So she obviously has restaurant running experience. And so that made that piece of it a lot smoother.
Yeah, it helps with that institutional knowledge. We're almost out of time. You mentioned you have a coaching program called the Apartment Investors Club. Tell us about that.
Yeah, so that one of the things I sort of discovered along the way was that there are a lot of people who want to learn how to buy apartment buildings themselves, either just because they have money and they want to buy it as an investment, or because they want to become a syndicator and start their own business. So what Apartment Investors Club does is teaches people how to do that, but more than just how to do it, it really teaches them how to think like an investor and how to approach these deals the right way. Because like when I started out, I thought this was easy. You watch HGTV, you think this is just like you buy a building and then magic happens and it's fixed up and now you run it and it's really easy. This is a really sort of nuts and bolts course with coaching that really teaches you how to analyze deals, source them, analyze them, do the due diligence, operate them, and kind of like soup to nuts. So it's kind of like my way of giving back and helping people to try to avoid the mistakes that I made when I started out. Yeah. So that's really what the content is.
Yeah. Final question. I'm a big fan of gratitude, especially expressing gratitude to those who helped you along the way. Now, when I ask that, a lot of times people will default to mentioning their family or their team. But what I'm really interested in is your peers, your contemporaries, your mentors, people like that who've helped you in your journey. So who would you want to shout out and who would you want to thank publicly?
I have a lot of people that I would like to shout out to, but I think, I will thank my partner, Shiv Parbu, who just really, without him, I could not have made the first hotel a success. And I could not be thinking about, wow, where can this go? Amongst other things, like where I'm thinking about this going now is our own brand, right? Our own, us having 25, 30, 40 hotels, around the Northeast that are all fitting this model of like a unique asset in a unique space that we can fix up and bring back to its former glory and kind of bring it, under our own brand. So would never have had that vision without Shiv and could not do this without him. So I'm very grateful for Shiv's partnership and friendship.
Yeah, Jonathan, this has been great. Where can people go to learn more about you, Apartment Investors Club, Hotel Laurel, and anywhere else they should go? Yeah,
there's a ton of places to find me, but if you are interested in the coaching program, that's apartmentinvestorsclub.com. If you are interested in investing with me, that's just Google Two Bridges Asset Management, and you'll find our investor forum. And if you want to go and stay in the Finger Lakes and enjoy beautiful views from your room and from the restaurant,
and good wine.
And good wine from the local area, and good beer too. It's the Hotel Laurel at Seneca Lake.
Excellent. All right, Jonathan, thank you so much.
Thank you, John.
Thanks for listening to the Smart Business Revolution podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.